are slow days in the markets, right? Heading up to holidays. But this might be one of the slowest. Not much earnings, not much news, though we got some to cover. Shipbuilders on the move. We'll also talk about GDP at 8:30. We'll see what happens. Jobless claims 80 at 8:15. But on a day like this, you want to have a really good guest. And you know what? We do. Craig Johnson, managing director at Piper Sandler. He's been pretty good on these markets. We'll talk to him. Folks, let's get ready for this trading day on PreMarket Pro.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, good morning, folks. Slightly in the red after that nice day yesterday. Only down a few handles. 69.26 and a half. The buck giving back what it made last week here, down 42 cents, 97.53. TLT quiet, up 20 cents, 87.56. USO flat, 69.71. GLD ripping again, up over 1%. 412.65. SLV does not want to be outdone. That's up over 1% at 63.21. And Bitcoin futures, man, we're stuck. We're stuck in a trading range, down $525 at 87,865. We're going to get things started here by telling you that these charts are brought to you by TradeStation. Chart, analyze, customize, get your program going the way you want to with TradeStation. We'll be learning a lot more about that in the new year. Bringing on Triple D here, and tell us why today's so slow. And tell us why. Analysts are kind of like, oh, I'm taking the day off.
Well, it's not rocket science. It's definitely not rocket science. We are so slow simply because you're in holiday trade. This week is one of the slowest weeks. Next week is typically slow as well. People are off. Traders are off. Reactions to news are even off. We're going to talk about that today as well. There's opportunities if you are at your desk and you're listening to the show, and you're not, like looking, just to go and hang out with your family right now. You want to hang out with us. There's opportunities. So we're going to bring you those opportunities here. The Brentster is in the background. He's coming in here right now to say hi. And he's looking through the news wires. They are pretty quiet, but there's always opportunities. And there was opportunities last night too. And we do have one major headline here, which is going to be the story of the day, and that is Novo, NVO, trading up 8% here in the pre-market. It's the regular session for Novo, though, because it trades overseas. Obviously, trades over here as an ADR. Brentster, Novo, give us the news. The drug gets FDA approval.
That's it. Wegovy, FDA approval in the U.S. for weight management, weight loss pill. We are unaffectionately calling it a fat drug, along with a couple other plays. And you think there are some kind of serious implications here this morning, Dennis. You even said you think McDonald's could be trading down on this.
I think there is some implications here, because it's one thing to have, a weight loss shot. A lot of people don't want to give themselves a needle in the stomach twice a week or however often you have to do it, I think. But now you have a pill. That's going to be more accessible. And this is a big deal. It's a big deal. Full disclosure, I am long Novo. I've been long Novo for a while here as a value play, as a drug play. And I mean, them getting really first to market here, because Lilly is close. They're working on it. And the Lilly drug is probably going to get it here approved here eventually too. But, VKTX have been working on it, GPCR, lots of people. But Novo gets to market. So Novo, obviously has their own shop, but now they have a pill. That's got to be an edge here for Novo over Lilly, at least in the short run here. But also, does it mean, more people are going to take this pill? And the way it works is it suppresses your appetite, brings down your cravings. And, when you're thinking about that, you're like, well, suppressing your appetite is probably not good, for, anything that's kind of like McDonald's. And I do see McDonald's trading down here in the pre-market. You wonder about your candy makers. You wonder about, their implications over there as well. But let's just start with Novo itself. Let's do the technicals on Novo, and then we'll kind of break down, the other potential plays here. Novo has been absolutely killed here for a long time. The stock has come from $140 a share when everybody was taking their shots and everybody thought they were going to be taking their shots. And it's given back the entire weight loss shot rally here, going to $48 here, closing at. We are lifting up big time here. Valuation, too, I just want to give that as well, because when you're looking at the Novo from a valuation, which we done in the STN room about a month ago, which is why I went long, I mean, it's very attractive. It's trading 13 times earnings. Price to sales 4, like when you just compare this to Lilly, just for fun, Novo's at 13 times earnings. Last time I looked, Lilly was around 40. Let's see if Lilly's come in a little bit there. No, 52 times earnings, but 34 times on a forward basis. Those are obviously off projections here. So, I mean, Lilly is trading at about a third of the valuation, or NVO is trading at about a third of the valuation of Lilly. And now they just got first to market with the pill. I wouldn't be fading this move. I see 8% moves, and I was like, oh, that's overdone. This can be a game changer for Novo, especially if they keep that lead for a while. I mean, if Lilly's pill gets approved next week, different story, and I don't think that's going to happen, but Novo gets a little lead here.
Yeah, technicals come into play when you have a catalyst. We have a catalyst now, right? So it's on the move. You could look at it in different time frames for different perspectives. This 50 on a weekly looks huge. I'm not even going to go back to all that other price action from 2024. We just got to take it for what it is. So establishing a base here over $50. It's trading 52.16 off $4. And then when you drill down on the dailies, that's right where the 200-day is, right there at 50. So people are willing to pay, 49, 48, 47, 46, even under 45. Are we going to be able to establish a bid here, a major bid at 50 over the next couple days, and then, work our way up? I'm not going to look at any of these intermediate daily highs and lows, but this is a longer term play. If this is good for the company, you should build a base at 50 and work your way towards 60. You have to look at what the other stocks that are being affected by it. Lilly, man, oh man, fought back to make that new all-time high. That's trading in the red. And then VKTX came back from the dead. We'll see how that is reacted. And then who else is in this weight loss?
GPCR, Structure Therapeutics is another one. There's a couple other smaller companies too in chat if you have them as well. There's a lot of people trying to work on these weight loss drugs. Amgen as well. Amgen's got theirs that they're working on too. So, I mean, there's a lot of companies trying to work on this here. But again, Novo gets first to market. On the headline last night, I went short Lilly because you couldn't get Novo. The HFTs go straight there, but Lilly didn't even move. So I actually was able to get short Lilly last night at 11 or 10.75. Hopefully you can still hear me. My power just flickered. And then I held it for a long time. And then I ended up covering it last night because it was like, it looks like it's basing. There's two thought processes here that I'm thinking about. One, I think it's not good for Lilly because, Novo's first to market. But then there's also the thought process that, again, if Novo's got approved, maybe Lilly's going to get approved here soon too. So that's would be the idea that, maybe Lilly doesn't get killed on this, because on my initial thoughts, I thought Lilly would be down 20, 30 points on this. Lilly only down, it's down 7 right now. It says only down 2, but it's a bad print. Seems like it's not down enough to me. I did cover my short though, because I'm like, looking at it and it's just not going down. And obviously, you're in a holiday trade. So you have to consider that to a certain extent, that there is more inefficiencies on headlines because there's not as many headline traders out there. But, I actually thought it would be down more. So I'm actually surprised not down more.
The jury's still out on this decline here from the all-time high. And it was also the all-time high that it made was also in the vicinity of the other, let's go to a weekly, of the other all-time high. So what I'm looking at here is you did a nice job of recovering part of that big decline that you have. And so you're still half of that move. But this is going to impede its progress going back up to that 1100. So if it hangs in here today, stays above this 50% retracement, holds 1050, then, the longer term trend is up. If you think this is some damage, that you're making a lower high here, I mean, you could do a pretty nice projection off that 1100 down to like another 100-point decline would take you back under 1,000. But right now, Lily, the jury's still out on this one.
And VKTX got hit a little bit on the initial headline and then bounced back too. And I think it comes right back to, well, we got one of these drugs approved. Maybe VKTX can get there, eventually to get their drug approved as well. So I think that's kind of why, some of these stocks, the peers aren't getting hit so hard. But Novo, it's great for Novo. That's the bottom line. Is that's the only one you can really say that this is really good for Novo. I mean, are you reaching with McDonald's? I just see McDonald's trading down, and I think, well, I don't see a downgrade. I don't see a headline. I don't see anything else. And I'm like, it's the thought process. It started trading down right with this news. If you look at the timing of it, like the Novo came out and a few minutes later, McDonald's started trading down. I think there is traders thinking like that, well, it suppresses, your appetite, not going there. And I got to go eat McDonald's. I love McDonald's. Maybe if I took a pill, I wouldn't eat as much McDonald's as possible. So I see the connection there, but I think it's reaching a little bit. But I'm just trying to give you the trading action this morning. McDonald's is trading down on something, and it started trading down the exact same time this Novo news came out, which makes me think it is connected.
Yeah, you can see the decline here in Mickey D's. I would say for your Mickey D's traders out there, this 315 area, just to ballpark it, there's a couple lows under there. But that's been good support here, at least in 2 out of the last 6 sessions. So this reclaims 315, gets a nice bid. Well, we'll work our way back up to yesterday's high is a ways away. But for me, for Mickey D's here, need to reclaim this 315 with a strong bid. Big volume on that expiration day. Was that an all-time high? I'll have to see if it made an all-time high here. No, close. Ooh, this 320. That was a big area earlier in the year. So we'll see how Mickey D's is affected by all that. I'm kind of, like drugs and pills and shots and this and that and everything. I mean, seems like it's getting a little bit crowded, but a catalyst for Novo.
It is, but it is a trend. People care more about their weight, and I mean, McDonald's is seen as probably the most unhealthy food out there. Even it's not true, but it's perceived as, when you think about like bad food for you, bad fast food, McDonald's comes to mind.
Yeah.
I mean, do we go as far? I did try shorting Hershey last night. It hasn't even moved. But you think about a Hershey or Mondelez. I'm not sure Mondelez. You wonder if those, but maybe they're diversified enough. But Hershey's more of a direct play on candy. But we are in the candy season too, with Santa Claus coming to town. So seasonality at play there too. But lots of implications, lots to think about there with this Novo news. The other big news, Brentster, was Trumpster. The Trumpster came out and he was showing off his new warships. He wants his name on stuff, and he wants the Trump warship.
Trump class.
Yes, the Trump class of warships. So he's obviously, yesterday was rumored the major warship maker is Huntington Ingalls, which is HII. That stock was moving up on the rumors that we were going to see Trump, basically saying we want more warships here. And indeed, that is what he said. HII moved from $325 about 2 days ago up to $368 here now. So this is your direct play. They make these warships, and Trump wants more warships. So, I mean, this is good news for Trump. Interesting enough, HII has the huge move. What I found interesting also, because I was digging a little bit, not the other really defense stocks moved that much, like Lockheed Martin trading down. NOC was up yesterday, I think, ahead of it, but it's kind of trading down because he talked about General Dynamics is up a little bit. So you want more warships, so war stocks are probably benefiting here too. I mean, Let's do some technicals on a few of these stocks, Joel. Let's start with HII, which obviously was talked about. It's a big move from 320 to 370. You're talking about a 15-18% move here off of Trump. Warranted thoughts? I mean, this is almost all-time highs for this stock. Actually, it is.
It is. And look at that price action on Friday and Monday. Oh, look at that. Look at those last 2 days. We moved up quite a bit on Friday and Monday. I'm not saying anything, but it's just noticeable on the chart when on Friday you go from 322.63 to 336. Yesterday's session, regular session, because this news came out after hours, you went to 336.60 from 336 to 353. I'm not buying it up here. I am not chasing it up here. I don't even know if you see that 375 area. I think that is long gone. I just think you need to see how this thing trades off the open. I think that it's kind of a little bit thinner of a stock. It has traded some volume, but I think some people are going to be licking their chops up here. I don't know where the offers are going to be, but I think they're going to be ahead of 370. Or 375. To me, like everyone's like, "Oh yeah, this is good. This is wow, this is new." To me, I'm like, "Wow, this isn't really good news. If we're ramping up our, defense, what the hell does that mean?" I mean, he's
Well, it's
going to want
not
to
our
pull.
defense, it's our offense. I mean, he
Ah,
changed the
yes,
name.
yes.
Yeah.
He changed the name from Department of Defense to Department of War. I mean, we're getting very aggressive with Venezuela. I mean, the war stocks, and again, we're traders here, so we're looking for opportunities. The war stocks are starting to really perk up here. I mean, look at Lockheed Martin, look at General Dynamics, got the base, it's hooking. NOC, same story, base, and then starting to hook up here. I mean, AVAV, which is war drones, we're not talking war ships though, so maybe that's not, but war drones has been beat right up. I mean, there's some opportunities probably here if we are ramping up war, and if Trump is going to get more aggressive with USA. I don't think he's going to conquest countries and stuff like that, but we're getting more aggressive with, hey, stay in line or the USA is going to have a say in this. I mean, that's good for the war stocks. You may not think it's good for humanity, but it's good for the war stocks. So your war stocks, again, the big five and the shipmaker, if you want to put HII in there, there's 6. So you can go Lockheed Martin, RTX, you can go, and they're all trading up this morning, General Dynamics,
GD. Yep.
NOC, AVAV, and HII, Huntington Ingalls. So, which is your ships. So that's, have that list, have that war. When escalations happen, when he starts talking tougher against countries, these stocks start to move. And I mean, you look at RTX, for instance. I mean, we're not far. We all-time highs on RTX?
It is all-time high, yeah.
Yeah.
Someone mentioned that in the chat. I can move the
Yeah.
monthly up here. Is there a war ETF? Frank has one. Frank Holmes has a war ETF.
There is out there. What's Frank's?
Is it just war? Is it WAR? I think it's just WAR.
Frank going
That's a
for-
thin. They're thin though, so you got to be
Yeah.
careful on some of these. Some of
US
these don't
Global
trade. Like
Tech
Jets
and
trades
Aerospace.
thick. Some of these smaller ones are really thin, so they're hard to trade because you can't get in and out of them. So I'd be cautious just buying some of these smaller ones. But you got to always look at volume. If your ETF's not trading, 100,000 to 300,000 shares, you'll be somewhat careful. XAR is another one too. Aerospace, it's obviously aerospace involved too, but that's near all-time highs as well. I mean, these are setups into 2026. These are stories into 2026. It's like Trump's laying it out for you. We've changed the name from Department of Defense to Department of War. We're getting more warships. In all likelihood, he's going to get more aggressive, on the geopolitical front. I don't know what that means for overall stocks, but I do means that I probably want to start looking at some of the war stocks as maybe trades here into 2026. So there probably is those trades.
Brett nailed it. It is war. And
War.
it's a newer ETF, but I
Okay.
mean that we got to get some volume in there. I also want to mention Zim. Is that the stock with like the crazy dividend, right?
Dude, that had news yesterday, but I want to go away from the story here yet. So I want to stick with this war story for one sliding under the radar. So Huntington Ingalls actually signed a deal with C3AI last year. You can bring up the article here because we went and dug it up. And I don't think anybody has noticed this yet. But this was last year, so they know the deal. But what Trump said, in Trump's exact words, was the ships will be very AI controlled. Well, C3AI is the official partner, the AI partner of HII. C3AI is a stock that has been beat right up. So, you look at this and you think, maybe this could be a catalyst. Now, again, we're in holiday trade and nobody's really talking about it here, but I just wanted to mention here, I'd be careful about a short AI. I actually did do a little starter position. You were asking me, Brent, what I consider a swing on it here.
Yeah.
I think it sets up in a couple of ways. I think one is we actually always talk about, the January effect, where, leaders of 2020 or laggards of 2025 can turn around in January and give you good trades. I mean, this stock, C3AI, was a $35 stock at the beginning of the year. It's 14. There's probably some tax loss selling that's been pushing this down. Probably even continues today. But if, you get that tax loss selling gone and you get a story and people saying, HII, if that war story continues, I mean, AI is working, C3 AI is working with HII. So it's not a bad thing here. So just keep that in mind. I'm considering, doing a little bit of a swing, a little longer term trade. I had it on for a short term trade, but I'm considering doing a little bit longer term thing with C3 AI here. The CEO is the one issue is he's the most honest CEO ever. Like when you watch this guy do interviews after they miss quarter after quarter, he comes on and he'll be like, it's on us. This is bad execution. I own this. I love hearing that because you get like the Benioffs that would make excuses and say, I'm the best company ever. This is not our fault. I hate that. So the one thing I do like about this CEO is he is honest and he owns it. Now, it has been a terrible investment. It's been a terrible stock. And this is a speculative play at best. But I'm just looking at it and thinking, is there the potential for this to pick it up in January after tax loss selling goes away? It is still an AI story, C3 AI. It's got the potential. So I'm going to put it on my official January effect list here right now. It's on there.
C3 AI. Cool.
Yes.
Added it.
I mean, it's sleepy. I mean, the boys were stepping up under 13, right? Building a little bit of a base at 13. And then the last few days, they stepped up at 14. So, I mean, the trade sets up well here as far as a risk-reward ratio. You're off the low
Your
for
momentum
the year.
traders would all say, are you nuts?
Well, that's what we do here on pre-market.
I like contrarian calls.
And, well, what is the low? Yeah, 12, 13. I mean, look at it. 50-day, always important. When you're beaten down on a stock like this, first thing you want to do is like clear the 50-day. Haven't been above that since October. That's way up at 1576. Maybe we could dig into the details and see what the size of the contract is and what the implications are, but it's flying under the radar for sure. Down 9 cents, 14.52. And just think about it. Like wasn't this like the original AI stock? I mean, the symbol and everything is.
They had the good symbol, but I don't know if they had the good business was the problem. So yeah. Tesla, I just want to mention too, there's hardly any ratings, but we did get one from Tesla yesterday. I think it was it Canaccord or Cantor? I can't remember who it was.
Canaccord, yep.
And they were raising their price target up. So that was a little bit. But then you have UBS this morning. So 2 ratings, actually. Sorry, I lied. UBS reiterates their sell rating. And they're lowering their fourth quarter 2025 forecast to 415,000 vehicles. So you have battling analysts here today. One raising the price target and UBS reiterating their sell rating, maybe after they read the Canaccord note. They're like, no. We're going to go the other way with this. So Tesla still has not hit the 500. It was my target. And we got so close yesterday, I could taste it. I was going to put the Tesla 500 hat on.
498.
No, 498.83. We missed by $1.20. I did tell the people in the STN room, I was like, it's close enough. If you've been in this for a trade, 495, maybe you just say, okay, I ring the register. Don't wait for the official $500 tick. But, it's been trying. I think it's coming, but it's not quite there yet.
Yeah, there. It looks good. Was it an all-time closing high yesterday? No. My number's still 489.88. I mean, you can look at the different highs here, but that was the all-time closing high, and that was last Tuesday, when it traded at 491.50. But can't argue with the price action here, trying to get to that $500 level.
Okay, I'm going to set up another trade for you here too, and potential for maybe a January effect, but also the potential of a Warner Brothers. So CNBC did a fabulous interview yesterday with Lionsgate CEO, which LION. They changed this ticker symbol, I think, this year. It used to be LGF.B.
Yes.
It's LION. And the stock has kind of just been kind of crawling up here, but they were talking in the context of Warner Brothers Discovery. I mean, everybody wants Warner Brothers. They all want it. They're all fighting for it. And they don't like it. I love it. They don't like it at 12, but I love it at 30. I mean, Lion is beat right up. And so this Fast Money he was on, and great job Fast Money, because they were like digging and pushing them. And they're like, what are your thoughts here first on the Warner Brothers Discovery deal? And he was giving his commentary. But then he was saying, this is good for us because, one, they trade with a lot lower valuation. And two, if, content is king and they're fighting for content, Lionsgate's sitting there. So then they're asking, are you a target? He wouldn't say no. Like, he's like just basically trying not. He's like, I can't talk about stuff like that. It's like, are you talking to anybody? He's like, I can't talk to stuff about that. And he was saying multiple times, like, just kind of like defending, but he wouldn't say no. So it kind of felt like that they were potentially talking to some suitors. So it's amazing how stuff like this just flies under the radar in holiday season. But I look at this and think, crap, and then you had Guy Adami saying it's way undervalued. So even take all that out. I mean, if you're going to go nuts and paying so much money for Warner Brothers Discovery content, why not Lionsgate too? Here's a stock that's really beat up, trading at a reasonable valuation. I mean, thought process here is maybe I have no position in this right now, but I'm considering a position. Now, the contrary arguing, playing devil's advocate with myself, would be AI is coming and they're going to produce their own content. And we won't need companies like Lionsgate because AI can produce all this content. I think it's a ways away, though. And I don't know if we're ever going to get to a point where AI replaces studios and stuff because they can just produce the content out of thin air, don't have to hire actors, don't have to hire, studio, don't need any of this stuff. So, I mean, it depends on where we're going. So the argument would be against Lionsgate is that we don't need you anymore because we have AI. So is it the anti-AI play? Maybe. But with everybody fighting for WBD as much as they were, I got to think, I agree with the CEO. He even said, he's like, it's good for us. So I kind of agree. I think it is good for them. And Lion has perked up. It is up 2.87% on that interview from last night, but not flying high, especially after he wouldn't deny that they were a target. So it was an interesting interview. Great job, Fast Money.
Yeah, I don't know. Can AI replace us arguing? I mean,
let's hope not.
Maybe one day.
Really?
Maybe one day.
I don't think so. But if it's the case, then we have bigger problems to worry about. If that's
Skynet,
yeah,
like once they figure out they don't need us anymore, it's full on. Like Terminator may end up being right here. We rewatch the Terminator movie. Skynet comes in, and Skynet, the artificial intelligence unit, comes in and basically kills all the humans because they don't need them anymore. And then they get all their bots after all the humans, and they're trying to just eliminate humans because we don't need these anymore. Lucky, Arnold turns the sides and comes to help. First movie, he's the bad guy. Second movie, he's the good guy. But that's a tangent, though, that I think we're a long ways away from replacing actors in studios here, though. So back to the original question, technicals and Lion, Joel. Do you think this sets up well in the whole concept of Warner Brothers Discovery?
Yeah, if there's, from a it's had a big run from $6 to almost $9. So, you always like a little bit of a check back and something. I'd like to see what the news was on, it had was that a big move or just a big bar? It was a big bar. I don't know. It's been on the move. If you want to wait, maybe see if you can get it at $8. What I would see in this one is do the bids form, with $8, so they step up to $8.50 now, take out the high of the move or above.
Let's see what happens today.
Yeah, it would happen. What do you get when you get it's not a death cross? What's this? A love cross down here?
The golden cross.
When the moving averages cross to the upside there.
Yeah, golden boy.
Yeah, that's right. The golden, you got a golden cross there at 675. So if you followed that, technically, I just can't think. What's Lionsgate put out recently?
The Hunger Games.
Okay,
They're the Hunger Games. That's a good question. Lionsgate movies. Question. Lionsgate movies.
Help us, AI. We need help here, AI.
Yeah, AI, help us out here. And of course, Gemini, Hunger Games, John Wick, Saw, Twilight. Step up. Hunger Games. They're the let's be dead honest here.
Yeah.
All these names out here, the Hunger Games stands out like a sore thumb. That's the big one.
Yeah. So, I'm not a big I don't like those movies.
Is PCE now or not? We don't know when PC is coming. Is it coming today? Is it over? Is it
GDP? Oh, we forgot about GDP.
Okay.
Holy mackerel.
And we're going to get back to Zim. We're going to come back to Zim. But right now we got to cover. I'm going wide.
Yeah. But where was my preview, Brent? Where's my preview?
We're looking for GDP Q3 GDP preliminary reading 3.3% growth.
Okay.
Yeah.
It's not bad. It's not bad.
Here we go. 10 seconds. Let's see what the number's going to be. See if it's going to be market moving here.
Need something.
Again, holiday trades. So I think you're in for not a huge move here, but
market is kind of quiet. Here
Not
is, we have
moving.
a very strong GDP, 4.3%, 1% over the expectation. The expectation was for 3.3%. Again, this is our preliminary reading. That's our first of 3 readings for Q3 GDP, quarter over quarter, up 4.3% versus a 3.3% estimate. Let me see what else was here. We also did get Q3 core PCE up 2.9%. That was right in line. We also got durable goods for the month of October. This is definitely some dated info, but durable goods down 2.2% on a month over month basis. Economists were looking for a decline of 1.5%. Market quiet.
You quiet. IWM leaked a little bit on this because with such a strong GDP number, you're like, that's information the Fed's going to consider, into January, and when they're thinking about early 2026 rate cuts. So it leaked a little bit on this, but not much. Again, we're in a holiday trade though. 4 point. Wow. That's an incredible number when you're thinking about 4.3%. It's a long ways away from Trump's 25% target where he wants to take it, but it was a joke because obviously Trump talked 25% the other day. Why can't it be 25%?
I didn't catch that. Really?
Yeah. Oh, you were away. He said he was on the interview and he's like, "Why is GDP got to be 2-3%? Why can't it be 25%? I want 25%." I was like, that's gonna be a hard target to hit. But regardless, 4.3%'s got to be one of the strongest ones in a very long time.
Yeah.
Crickets. I'm just going to say this from a technical perspective here in the S&P. You matched yesterday's high, 36.25. Yesterday's high, pre-market high, 36.75. No, I'm not going to call a double top because it's never a double top in the market. But we're down. We leaked a couple handles off this, but
we did have PCE too, which came in line.
That came in line.
2.9 versus 2.9. Yeah. So we got some numbers here. Again, this holiday trade, though, don't expect crazy moves. There's not that many traders out here that are just like going nuts here on trading. This is like you're running skeleton crews here. It is quiet. So I think, on normalized markets, we might see more movement here. But the lack of movement isn't probably so much about the numbers. It's probably more about the day we're on. It's December 23rd. People are spending time with their families. But not Craig Johnson, because Craig Johnson comes in and he's ready to give us some analysis here. Let's go run that guest intro because I always love what Craig has to say.
Okay, coming to the stage, Craig Johnson, Chief Market Technician of Piper Sandler. Another year to the close. Craig, how you doing?
I'm doing fantastic, guys. How you doing?
We're doing well. Before we bring up your nice looking charts there, just overall, I mean, you're a little cautious last time we were on. You kind of had your targets. You kind of stick with your targets. We've kind of yo-yoed since then. What's your overall sentiment here heading into year end, your year end targets, and maybe we'll talk about 2026.
Yeah, I mean, I think coming into year end, it looks like the Santa Claus rally, which should start today, looks like it could be kicking off. And typically, your average return from a Santa Claus rally is 1.61%. And if you look at forward returns in 4, 13, 26 weeks, you get pretty good positivity rates for that to happen. Again, as I go into the next year, we did lay out a price objective for next year of 71.50. And I think 2026 is going to be an interesting year. I think the economy is getting better. You saw that with the GDP numbers today. You are also likely to see earnings numbers nicely pick up. But I think from a trading perspective, we got to keep in mind that when you have 3+ years in a row of double-digit returns, to go for a 4th year in a row, statistically is kind of a bit rare. And also in these years, when you get double-digit earnings growth like we've seen, you also tend to see the multiple of this market contract. Not to get overly fundamental with people here this morning.
We need more fundamentals. Yeah.
But when you see that actually happen and you start looking at what the forward returns are, everything from not only the midterm elections to historical PE multiples to historical returns of double-digit returns 3 times, double-digit returns 3 years in a row. All those sort of pieces, when you put it together, suggests that you're probably going to have a year in 2026 that's going to be great for traders, but it's also going to be a year that's going to be probably, call it 5% sort of upside is what you ultimately get. Not exciting, but probably the reality of what we get. And then from a trading and individual stock perspective, I think we got to spend time really focusing on biotech. I think there is a huge pipeline of opportunities, lots of M&A, those kind of things. I think you're going to have a lot of opportunities. Just looking at things like XBI, IBB, and then start drilling into some of those names, whether they're Amgen, Gilead, you name it. On the larger cap side, there'll be plenty of trading opportunities there. And then if the traders out here today really want to go down into small cap land, there's definitely names that could be discussed down there in small cap land that are reversing longer term downtrends. Big controversial names, things like Gossamer, GOSS. I'll throw that one out to you. Pali, ticker PALI, is another one where you get a big longer term downtrend reversal. IDEA would be another. Would be another one to go back and focus on. Taking a look at that one. IDYA would be another one that's sort of setting up nicely on the charts for people. But again, you got to put this into perspective of the most important part of playing those biotech trades is going to be positioning. How you're going to size these particular trades, because you get a lot of binary events in these things. And so for every listener out there, yes, I threw you a couple bones, I threw you a couple ideas, but be appropriate on how you position size some of these things, because you can look at some of these names that look great on the charts and they were down 90% after the data event came out. So build yourself a basket and play it appropriately.
I mean, maybe still the best way would just be to continue to play the XBI. I've been long it for a while. It continues to grind higher here. It's, if you get one bad trial in there, you're not going to lose 50% of your money. Here, you're going to lose 0.5% of your money because like over 100 stocks in there that are mostly equal weighted.
Yeah, I mean, you take like a Gossamer as an example, and on a bad trial outcome, which is coming probably in February, you could be down 90% or you could be up 300%.
Yeah.
Play the odds if you like. It's up to you. But I'm just saying to people, just play it appropriately and don't get too far out over one's skis.
I like your. Sorry,
Dennis.
Joel. Sorry, I saw you go. I like your thought process with going into areas that maybe haven't been, again, in the last couple of months we've seen XBI pick up in the last couple of months, but really putting it into context here. The XBI is down significantly from where it was in 2021. Here we are 5 years later, and we're still 30%, 25% off the highs. And IBB. Right. Is this like a more of a laggard? Do you think we could get a 2026 laggard market where some of the stocks, value stocks, and kind of left for dead start up here, and maybe other stocks are fully valued? What are your thoughts overall in 2026?
Yeah, I think you could definitely get a little bit of a rotation into some of those names, because I don't think you're going to get the same sort of big momentum trade that we had in AI in 2025 happening again in 2026. I think it's going to be a little bit different. In technology land, I would say look at something like a JFrog, ticker FROG. What a great looking chart and a great looking setup on that one. I think in crypto land, you could play something like a Figure, Tech Solutions, ticker FIGR. And you got an interesting sort of setup from there too, with what I'm seeing with some of these names. Again, these are not your mainstream names for people. So again, play it appropriately from that perspective. I also think on the large side of the world, Tesla, what a great looking chart setup on a Tesla on a weekly or monthly basis from here. I think is a great place for people to go in and definitely trade. And then I also think we got to be focused in 2026 on all these optical companies. There's been a lot of money spent building these data centers, and now we need to start building faster interconnects. So 2026 will probably be a discussion about faster interconnects. So things like Coherent, Sienna will probably be some of the plays to think about from here. AAOI would be another one. And then also we need to be focused on the software side of it, like I mentioned with the JFrog for that AI and those other pieces to it. These are all going to be sort of the trades and setups and things to think about, in the year to come. And again, people just need to position themselves appropriately. Too many people have been just saying, I got to do NVIDIA, I got to play NVIDIA. And I think it's going to have to broaden out beyond NVIDIA. And I think the smartest play right now beyond NVIDIA is Micron. I mean, there is a shortage of memory out there for all sorts of different devices, and you're going to have a lot of spending. So whether it's the semiconductor suppliers that you want to focus on, that could be a whole nother area. Lam Research, those kind of names are all, LRCX would be, all these kind of names that will benefit from the needing to build more memory plants. And of course, the current administration wants that all built here.
Where are we at on this AI? I mean, different stages. I mean, you've had, big names make some big moves and then come back. I mean, some of these, I mean, Google, stepping in here with Gemini. Where are we at? Are we in the first inning, second inning? I mean, you're talking about the picks and shovels here, going, coming back. What stage are we at? And is it time to lay off the hot rods and just look at the companies that are building the infrastructure? And at the top of this, I'd like your thoughts on Oracle.
Okay, so let's go in reverse order in terms of Oracle, right? So they're obviously going to be more of an M&A play right now. So from a trader and a technical perspective, when you start getting some of those kind of plays coming into discussions for like Oracle, like you got to be a little bit careful. I mean, you got Larry Ellison guaranteeing personally $40 billion to get that transaction done. And you're when I see those kind of M&A activities, Joel, I kind of step back from a chart perspective on it because it's going to be more fundamentally driven than just sort of a trading play. But right now, you better hope the uptrend coming off of the September 22 lows is the area where you're going to find support. So if you want to draw that, Dennis, on the on the weekly chart coming off of those 22 lows, you should find an uptrend support line.
And what low are you talking about here?
The 22 September 22 lows is what you want to be focusing on for that, and draw your uptrend support line in there. And when you go back in that, go draw that line in there. And when you do, that is the uptrend line that you want to see absolutely held. That is your kind of line in the sand. Nope, go back to 22. Yeah, it is 22. Perfect. That 150 number is your absolute line in the sand. If something is going to break that, I don't know. It could be a magnet for the stock to pull back to. I don't feel compelled to have to step up and buy Oracle today to be absolutely.
It's been one of the toughest plays. I mean, you think of all these AI stocks and you think about, the only one that they're talking about with balance sheet problems here now and maybe has, committed too much capital and they need financing and stuff is Oracle. I mean, all of these other companies are cash rich. Right. So, when you're looking at a balance sheet of Google or Nvidia, it's a completely different animal here. Apple itself as well. I mean, Oracle just, maybe just trying to get too big too fast, and that can sometimes be a problem.
Correct. But, the issue necessarily, when you think about the Microsofts, the Apples, the Googles, and these kind of names, the Metas, like, they're great companies. They're just not putting up the same sort of relative outperformance that they used to put up. So the market is broadening out into more of these cyclical stocks. And I think that's actually kind of a good thing. You've seen great moves in gold. You've seen great moves in silver in these other areas. In fact, people don't really care about this, but when I look at what basic materials have done this year, it has actually outperformed tech. And there's been so much focus just on tech from a trading perspective because it's more interesting than some of these gold companies and silver companies.
Well, is this a play? Like, one, I want to ask your reasons why, but my thoughts are that, hey, if we are lowering interest rates next year, that's not a bad thing for commodities. And two, it can be inflationary if we lower too quickly, and that's also not a bad thing for commodities. Is this people just getting ahead of the lower interest rates coming for 2026? Why are commodities so strong right now?
I think to a degree it is people trying to get ahead of some of the inflationary pressures. And historically, commodities have been a hiding spot for that to be the case. You've also had a lot of central bank buying of gold and silver and these other precious metals because they don't necessarily want to buy as many U.S. treasuries as what they've done in the past too. So the Central Bank of China or Chinese government, they're out there buying gold. Russia. Why would they want to put any gold in any sort of US dollars or treasury bills or anything else? They'd rather buy gold and do those kind of things. So you've had a combination of people being defensive, but also a lot of central bank buying for reasons that are just sort of beyond the dollar. And I'm not sure those trends necessarily end. So you can continue to see these precious metals do well. And then also, if we're going to get a pickup in the economy and it remains strong, copper is probably one of your easiest plays for next year. Yeah. Thinking about things like Freeport-McMoRan, the way they've consolidated, and those kind of companies, they're probably setting themselves up for a nice move and a trading opportunity into 2026.
What about rare earths? I think it's Well-Being Warrior, who I think is new to the chat here, is asking about the outlook for rare earths, fitting into the whole commodity theme here. And big pullback, almost triple digits. Maybe we did hit triple digits. Stock cut in half here, hanging above the 200-day. Where are you at on the rare earth stocks?
I think the rare earth stocks can do well into 2026. I have not bought any of those recently. To be straightforward with everybody here, I've sort of said, hey, some of those names have had pretty big moves. I'm sort of waiting for them to pull back, find reality. If you want to pull up, Dennis, one of the ETFs on that, that'd be great.
Yeah.
Look at that chart. But
what would that be?
What would that too, which is
rare
the biggest of them all.
RARE, what's
you can look at that one, you can look at rare, you can look at some of these others, but they're just at a sort of a point in time for me when you look at that longer term chart.
I know. Do you have the ETF on that? Is that for rare earth stocks?
There's so many of these rare earth stocks, like USAR is one of the rare earth stocks too, and they have pulled back here, Craig. I mean, MP Materials might be one to talk about because it was $100 and it's 54, so it's been cut in half. I mean, there has been a pullback here, but
a lot of these have been cut in half. But here's the thing: is have they really started to resume their uptrends yet?
No, that's a problem.
Correct. Just because they're cut in half does not mean that we should buy it.
Yeah.
Because they could fall by 75% before you start the next leg up. So I think some of the momentum trade has come out of this. So when you look at the chart of MP, the one you're mousing over there right now, Dennis or Joel, that could be almost a triple top. Okay. And if you were to trace 50% of that move from the lows in I want
24.
Yeah, if you look at the lows, and I think it was 18 or 24 on the far left-hand chart for me, the longer-term chart, like you're not even close to retracing a third or even a half of some of those moves. And for those kind of momentum stocks, I'd rather wait to see some of these things come back.
If you go, let me see. If you go from that triple digit down, actually, if you go from the triple digit high at 100 to that 2024 low at $11, you're kind of right there right now at the 50% of that move, if that was the move that you're talking about. But Craig, I want to move into another topic that you've been following with for years now. Where are you at on Bitcoin?
Yeah, I mean, Bitcoin, if you look at the longer, again, pull up the weekly chart of Bitcoin, just because I wonder, all traders need to be thinking about how to position and understand what the longer term trend is of some of these pieces, right? And so when you look at the longer term setup on BTC, we've clearly broken, coming off of the 23 lows, the uptrending channel that's been intact. So it feels like we need to see a deeper pullback in Bitcoin before you actually find the lows. Could that be somewhere between 72, 75,000? Absolutely, it could. That would be, I think, pretty darn painful. I think you got to draw that up a little bit tighter is where you should be drawing that, but that's fine. You get the point. But we've broken this uptrend. And when you break uptrends like this, it's not immediately repaired. That one is going to definitely take more time for the Bitcoin to be, that chart to be repaired before you can start that next leg up. And
okay, Craig, before we let you go,
Joel, I want to go. One last thing. You're seeing the same thing with all these altcoins too. All these altcoins, whether it's ACH or some of these like Link and some of these other Chainlink, all these other things are, again, they have been absolutely hammered. My thinking is that you're going to get tax loss selling in a lot of these names, probably from here over the next 6 days or so. And as you see that play out, you probably find some lows, at least shorter term lows, probably as you get into January, perhaps February timeframe. And I'd expect toward the end of the first quarter, you probably start to see a little bit of a recovery in the crypto space.
Okay, so I want to go back to what we were talking about at the top of the interview, and that was your year-end target. Now, I think of all the years that I've had you in 2026, of all the years, maybe you've been on with us for like a decade now. I don't
Jeez, I'm that
remember
old.
what.
I'm that old.
Younger than me, Craig. I don't remember your year end, and we've gone through COVID, we've gone through different cycles, presidential elections. I don't remember your year end target for the next year being so close to where we are currently trading. I mean, to me, I've always, we had Ivan Feinseth on yesterday, and he can wave the pom poms and be bullish and stuff. He's a little bit higher, but I don't remember you having a target that's really, to me, so close to where you're trading. That makes me feel like a little bit more of a risk off year for next year.
Yeah, I think next year is going to be more of a trader's year, right? There's going to be these opportunities where you might actually get, a decent first quarter, and you end up with sort of a sell in May, go away, which would be pretty consistent with midterm election years. And you sort of see the market fall as you get through the summer months and into the midterm elections. Probably be some changes that happen in Washington. And then put that into combination with 4th years of bull markets, in combination with 3 years of double-digit gains in a row. And all these pieces together all point to this sort of lower level. I think, Joel, when it really all comes down to it, I think the market's already done a pretty good job of anticipating some of these events in the market. And this will be a year where we watch valuation contract as earnings grow into that valuation, which is typically what has happened. I believe 7 out of 19 times we've had double-digit returns since the mid-1980s. You have seen the multiple of the market contract, and you end up with a single-digit year. So not trying to be negative, not bearish.
No, I gotcha.
Yeah, not trying to be bearish. I'm not bearish at all. The bull market is still intact and well, but it's probably a year where the bull rests before you take another leg higher, perhaps in 2027.
All right. Positive action's never bad. Craig Johnson, Chief Market Technician at Piper Sandler. Maybe they should change it to your name, Johnson. But great job analyzing the markets with us through the years and into next year, Craig. Really appreciate you coming on.
Thanks for having me on, Joel. Thanks, Dennis.
Thanks, Craig. We'll see you in the new year. Market sell-off a little bit here. Was a sleepy sell-off, took some time and starting to go down. And again, the thought process, I think, with the sell-off here, we could see it clearly in the IWM early, and it's continued in the IWM, is, hey, if the GDP is, coming in decent, the PCE, is there really, a reason to cut in January here? Here you go. Probabilities, the Brentster's all over it here. Did we change? Did it move after this GDP number here? Brentster, you're on mute, by the way.
Yeah, it moved a little bit. I found this nice little thing here. You can hit the compare feature over here on the CME's FedWatch tool, and it'll show you what the odds were 1 day ago, 1 week ago. So 1 day ago, it still was 80%. We're up to 85% or so now. But I mean,
went up a little bit.
It went up about 5%. Yeah, for sure. So I mean, already was a pretty high odd that we weren't going to get a rate cut in January, but I mean, a little bit of strengthening here on that for sure.
Yeah, so 15% chance that we do get a rate cut is where they're at.
Let's see. Let me just click back over. Yep, 15%.
Right. If we're cranking, GDP's cranking, is that inflationary? I think there's a couple different implications.
I think the inflation in 2026 is potentially there. And, we've been calling for it. And obviously can't, we're just going to only look at the CPI because we know inflation's always been there. They just lie to us. But, I mean, it's, it is an issue. And, it's been held in check tariffs really haven't seen a lot of inflation happening here. Certain companies are struggling and they're eating it. They're eating it more than we thought they would. I mean, like Nike, with margins, you're seeing certain companies that are actually eating it. But again, when we were talking 50, 60, 80%, the numbers didn't land there. 15% is doable. Most of these, tariffs, have come in around 15%. So I don't know. At 15%, the market can absorb that.
The Zibster. Or are we going to Hive?
We got Hive up there. Let's go to Hive.
Let's go to Hive.
Give some love to Frank, our sponsor here.
Thank you to Hive Digital Technologies. Ooh, I got to add Joel's charts. We have the Hive chart on air right now. Hive Digital Technologies, global leader in green power data centers for Bitcoin mining, high performance and computing AI, operating with nearly half a gigawatt of renewable energy. Hive on track to capture 3% of the world's Bitcoin production by the end of this year. I wonder if Hive is going to be giving us an update. They gave us an update, I want to say like 3 or 4 months ago, when they crossed the 2% threshold for Bitcoin production. Maybe we'll hear from Hive early next year that they crossed that 3% threshold. There is a QR code in the bottom right corner of your screen. You can scan that to learn more about Hive. Also, a link in the description of this YouTube video. Thanks again to Hive Digital Technologies.
I mean, quick look at Bitcoin here as well. Just stay with crypto here before we go to Zim. I mean, the IBIT just cannot seem to get away from this like 47, 48, 49. It looks like it's perking up, and then it has a little down day here again. Ethereum chart looks the same. You can go to ETHE if you want to see that. And the same story here. I mean, support is very well defined. I like what Craig says. I mean, there is the potential for a January effect with crypto because it hasn't been, like that great as of late. So, I mean, could there be some tax loss selling in some altcoins? Could there be some tax loss selling in some of the crypto plays? It's possible there. I mean, Bitcoin's really kind of where it was when it started the year, though. So it's not like people are sitting on huge losses here. And a lot of those people are hodlers. So I don't know if it applies so much to Bitcoin, but maybe some of the altcoins and maybe the crypto winter that we've experienced here for the last few months, maybe can get some relief in January. I mean, markets change in January. The seasonality effects are real, and they do change, and leaders often become laggards, and laggards often become leaders. So keep that in mind. The stories do change once we get into January, but we're still 6 days away from there, so we don't want to be too far ahead of that trade because that tax loss selling could still be here.
Final thoughts on Zim here. We did get some news on Zim. Brentster, you got that for us?
Yeah, so the company was doing a strategic alternatives review, and last night at 4:05 p.m. Eastern time, they had an update. The company said they received competitive proposals from multiple strategic parties to acquire all the outstanding ordinary shares of the company, including an offer from the company's CEO and president, Eli Glickman. They said that the offer from Eli Glickman significantly undervalued the company, and so they declined. The strategic review, which is in advanced talks, includes consideration of potential value creation alternatives such as a sale of the company and capital allocation and potential return opportunities with the goal of maximizing shareholder value. That was for ZIM.
Isn't this like the dividend, baby? Like the huge dividend?
The dividend is variable, so it moves around. And at one point in time, the yield was over 100%. It's down to 19 now, so they've come down a lot. So that yield is all over the place on this thing. But I mean, the stock was $85 back in 2022. It's come down a long way. So if you're getting these huge dividends, that was nice and all, but you lost a lot of money on the stock.
Yeah, which is not a good thing. Well, whatever, regardless of the shipping news, regardless of that news, to me, it's all about $21. And I'm getting that number from the weekly chart, which has been weekly resistance going back to earlier in the year. So can we establish a bid tomorrow? Or not tomorrow. Can we establish a bid at 21 for ZIM? Coming up at the top of the hour here, so we're going to switch gears over to the STN room. But first, I'm going to tease you a little bit. Should we run the intro? Do you do the intro early for Ryan?
No, we can't.
You want to save it. We want to save it.
We have to save that.
I like how you're thinking, Joel, but let's save it. Let's save it.
Saving it.
Ryan Dietrich. I still haven't decided whether or not I'm gonna be on. You know, I could take a loss, right? You gotta be good. You gotta stand up for your team when it goes through. So I will be on with Ryan Dietrich tomorrow. You all know him. He's running the shop over there at Carson Group. So another good guest today on STN today is Shad Markowitz from the Corlin Economic Report. And if you want someone that's been on top of copper, the precious metals,
Yeah.
and
Shad's
oil,
good.
you got to maybe break out your trial today for the STN room, folks. That's all from me here on this Sleepy Tuesday.